Welcome back. This is Mr. Marshall for Truganina College Year 9 Maths. This is the Financial Maths unit, and today is Lesson 10, Income Tax. So today we are learning about tax on our wages, and I am successful when I can identify the different taxes and taxable income levels. I can calculate the tax based on the income, and I can calculate net pay based on deductions from the salary. In Australia, currently, people who earn more than $18,200 in a financial year must pay a percentage of their earnings as income tax. The rates of taxation in Australia residents are shown in the table down here. You will notice that each tax bracket has a different taxable amount. So from 18,200 up to 37,000, it's 19 cents per dollar. From 37,000 up to 80,000, it's 32.5 cents for every dollar. For 80,000 up to 180,000, it's 37 cents for a dollar. And if you earn more than $180,000 in a year, you pay 45 cents for every dollar over that $180,000. Now, these amounts here are the amounts for all of the previous tax brackets added up. So this $3,572 is how much tax you'd have to pay if you earned exactly $37,000. But if you earned $37,001, you would then have to pay that last dollar as at 32.5 cents, but the rest of it would be taxed at that 19 cents. Now, for the most recent rates, you can find that at the Australian Tax Office website, which is listed here. When you receive a paycheck, some of the money has been taken out by your employer to cover your income tax and Medicare levy. This is known as pay-as-you-go or pay-G taxation. This means that at the end of the financial year, the tax department already has an amount saved aside for you for your tax payment, and you don't have to be finding the amount at that time. The initial amount before tax is taken out is called the gross salary, and the amount that you actually receive in your bank or in your hand is called the net salary. The amount of money to be deducted by the employer each week is published by the Australian Tax Office, and we have a copy of it in this table down here. Okay, here is our first example. We will find the amount of tax paid on the annual income of $22,000, and we'll also find a second example, which is $92,000. So for the $22,000, it is in that second bracket from $18,200 to $37,000 bracket. Now, the tax payable for that is 19 cents for every dollar over that $18,200 amount. So we need to work out how many dollars $22,000 is over that $18,200. So we just take it away. So 22,000 minus 18,200 is $3,800. And then we just multiply that by 19 cents per dollar, or 0.19. And that gives us an amount of $722. So let's write that in a sentence. The tax payable on $22,000 is $722. Okay, for number 2, we work out again that $92,000 is in the fourth bracket from $80,000 up to $180,000. So the tax payable is 37 cents for every dollar over $80,000. So let's work out how much we're over $80,000 by. And again, we subtract it and we get 12,000. So now we multiply the 37 cents or 0.37 for each dollar, and then we add it to the base amount that was listed in that table. So the tax payable is going to be 30.37 times 12,000 plus 17,547. We type that in our calculator, we get this answer, which is 21,987. And again, we write it as a sentence. The tax payable is 21,987. Here's our second example. Fiona has a gross wage of $900. We need to do three things for this. We need to use the PAYG table and find out the amount of tax that should be deducted. We will work out that percentage of her pay that is deducted, and then if Fiona receives an extra $98 for family allowances but has other deductions such as $71 for superannuation and $5.50 for her union fees, what's her net pay? So starting off, we just look it up on the table, we find the $900 for the gross wage, and we see that it's $148. So all we have to do is write the answer is $148. Now we need to work out $148 as a percentage of $900. So we put that into our percentage formula. $148 divided by $900 times 100 equals 16.44% is deducted from her wage. And for part 3, we have 3 steps. We need to work out her total income, which is the gross plus her family allowance. We need to work out her deductions, including the PAYG tax, and we have to subtract it from the total. So, total income, 900 plus the 98 for the family income is 998. Total deductions, 148, our PAYG, 71, our superannuation, and $5.50 for the union fee, which gives us a net pay, when we work it out, 998 minus $224.50, which is our total deductions, is $773.50. So we will be working through our Jack Plus Math Zone, chapter 11.7, and everyone will be completing these questions from 1 to 10. And this is your hurdle task that you will be submitting. And our reflection for today is, why do you think we have different rates for the tax based on the amount that you earn?